Hey, puppy trades! You guys don't even know how seriously I want to take being the best social media influencer and being specifically the best stock market influencer in the world. I'm going to make a daily news channel page and I'm going to think maybe videos like this are a good template. So I'm going to teach you a little bit about economics. I do have a background in economics and supply chain. I'll let you know that if someone is doing something you like, reward them. Reward them in any way possible that you can. And if someone is doing something that you don't like, uh, don't reward them. Make sure you never reward them. All right, businesses and relationships and all. I see so many people. They're dealing with toxic workers. They're dealing with toxic boyfriends and girlfriends, toxic parents, toxic kids, and you get down to the bottom of it, and you're like, what are they doing? How are you responding? And they're rewarding them. And economic law says if someone is doing something you don't like and you're rewarding them, they have to keep doing it because incentives run the world. Anyway, I said a little bit of a crazy thing. I said that while all of these fun stocks like Riot Blockchain and Bit Digital and GameStop and Marathon Patent Group and Bitcoin and Dogecoin and Shiba Inu, bang, 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 well, actually, maybe not Riot, but bang, 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 and all the others. Riot's gonna get there. I said that while they were doing all that with all these fun stocks, there was actually going to be some really high quality stocks, particularly in the dividend sector, but also beyond the dividend sector. So we're going to get into two stocks that outperformed the S&P 500 today, 0.03% right now. Disney and Target very quietly outperformed. So we're going to get into Disney first. And we're going to see a very pretty. Actually, let's do Target first. We're going to get into Target first because I already have it in weekly mode. Target has evolved from just being a pure brick and mortar retailer to an omni-channel entity that actually hurt them in the e-commerce correction, but now it's going to try to follow Amazon, like Alibaba, still lagging Amazon, but we can possibly look at Amazon's chart for what these institutions might be thinking. 2.95% dividend yield. Let's get under the hood. 11.55 interest coverage ratio. That's honestly my favorite financial statistic is the interest coverage ratio because the higher the better. Same thing for return on assets. 79% institutional shareholders and this lovely, I suspect, or are they not growing their dividend anymore? Anyway, they've been paying a dividend for a bit. It doesn't look like they've grown their dividend. It looks like they've actually shrunk their dividend a little bit. Or actually, I'm reading this backwards. I don't know why bar chart is doing this. Bar chart changed everything. Sorry, their dividend is growing. Their dividend is growing wonderfully. With a payout ratio of 45%. That's pretty low for a dividend that's been growing for such a long time. It doesn't look like Target has any financial problems based on its interest coverage ratio, based on its growing dividend with a low payout ratio, based on its institutional shareholders. That kind of under the hood aspect of Target is suggesting that the institutions have been accumulating it this entire time, potentially. We've got very high implied volatility, so if they want to buy options on Target to hedge, they're going to need to pay a hefty price. We look at Target right now. It does look like we're going to see it enter a wave 3 of wave 3, or really just a regular wave 3. But on the smaller degree, potentially a wave 3 of wave 3 as well. Yes, that could definitely be a wave 3 of wave 3 if that really tight low right there of 144.67 doesn't go. This could be a nest where it's a wave 3 on the weekly time frame, but also a wave 3 on the daily time frame. So looking good for Target. I like that tight level of 144.67. That's the daily stop. The invalidation is 132.42. That's not a trading recommendation. That is just my analysis of Target. We'll get into Disney and talk about how this kind of consumer sector can be turning around at a time when a lot of people are trying to see where is their value in the market, if there is any at all. So we'll zoom out on target a little bit. I think it's going to look something like this. We're going to see, we have seen target turnaround. I like 144.67 for 0.67 as the daily stop. These are all Elliott wave terms. This is not a suggestion for the machine to have this be thrown into tomorrow morning. 132.42 is the weekly invalidation. So 132.42 invalidates. So I'll clone this. I'm getting better at bar chart. Their new settings. And I'm expecting the target is going to enter this wave 3. So finding this wave 3 target is pretty simple. 1, 2, 3, 4, 5, wave 1, ABC wave 2, above 144.67. It's turning around and entering a wave 3, and it's going to be heading up to 211 before a shallow wave 4 and a wave 5 higher. So we can refine this target a little bit for target. We can go and get these trend-based extensions. Start at the bottom of wave 1, connect with the high of wave 1, and then take the extensions with the low of wave 2. We can actually see this possibly a better target for target than 211 is 232, which lines up perfectly with the 61.8% extension of wave 1. So I really like this 230 to 232 target zone. It looks very good. I'm expecting this is wave 1, wave 2, wave 3. There will be a wave 4 correction after target enters 211 to 232, and then there can be a wave 5 higher. So the shorthand for getting the wave 5 target, since it's kind of far away, is by taking the length of wave 1 and simply placing it at the wave 1 high. That's because of the Elliott wave principle, that wave 4 retests but doesn't break the wave 1 high, and then wave 5 is at least the length of wave 1 placed at the wave 4 low. That says this sequence can take target all the way up to 260. That means that yield is going to be much, much, much lower, possibly not very long from now. So that's target. It outperformed the S&P. I expect it's going to continue to. Now let's look at Disney. We're actually going to look at the daily chart of Disney. It's formed an interesting sequence, and we're really just going to hammer down this daily count right here. Talk about this Elliott wave evidence. Obviously, the Elliott wave evidence that can't be told to the broker. I did put into the ETF total return calculator, blindly averaging into YieldMax's Disney ETF, DISO, yields about a 4 to 5% annualized return. Now, that's not very good, and Disney's implied volatility for options is pretty low. But if Disney starts to turn around, we could see a call skew, and then DISO's average returns could improve. And we could also see that blending DISO with Disney could be a very interesting opportunity because Disney has so much fundamental backing. Blending shares of Disney with DISO could be a remarkable opportunity. I'm going to want to see those total returns pick up, but I do own DISO and I do collect dividends from it every month. It's not one of my biggest positions at all. This is a 1, 2, look at this RSI wave 3, makes the highest high right there at 82.12. Then there's a shallow wave 4 and a wave 5 that ends with momentum divergence. The RSI tops out at 80.13, even though price makes a new high. That's called momentum divergence. So we have 1, 2, 3, 4, 5 waves up. Wave 1, wave A. This is an A, B, C, wave 2 correction. And we look at from this low, 1, 2, 3, 4, 5, wave 1, wave 2, and then a wave 3 has occurred. Why do we think a wave 3 has occurred, or why do I think a wave 3 has occurred? This RSI is already above 71.73 in Elliott wave. Wave 5 ends with momentum divergence. This looks like 1, 2, wave 3 of wave 3 coming out of this lower time frame right here. In the bigger picture, this is 5 waves up, wave 1, wave A, B, C, wave 2, wave B is valid above 83.91. I think a more useful level is that this is ending a small wave 2 above 91.46, and a wave 3 of wave 3 can occur for Disney. Now, if we zoom out a little bit, that's a really interesting thing that can happen, because like Target, Disney could go all the way up to 141 for wave 3, because that is the 127.2% extension of the length of wave 1 placed at the wave 2 low. And after that, there could be a wave 4 correction followed by a wave 5. If wave 4 retests the wave 1 high, and wave 5 is the length of wave 1 placed at the wave 4 low, then we can ultimately see Disney head up all the way to the 160s, and if it's blended with DISO, like Target, it can pay a dividend along the way and keep outperforming the S&P 500.